Good Thursday afternoon to you. Welcome to the Jon Sanchez Show on News Talk KOH. It's a pleasure to be with you. Hey, we're almost to Friday. It's also a great pleasure to be with our co-host, Mr. Aaron Clark of Edge Realty. How are you, my friend?
Doing good. Enjoying the warm weather.
Good.
It's beautiful out.
No
Oh my
kidding.
gosh. We get feet of snow and then it's golf weather. It's
Yeah,
crazy. I love it.
yeah. Golf, geez, almost boating weather.
Hey, there you go.
I know. Seeing seeds popping up in my fields. I'm like, wait a minute here. You're way too early.
Everything's gonna die.
Everything's going to die. Exactly. Yeah, we've all seen these head fakes. I'm sure there will be many more, feet of snow coming our way, before this whole thing's over. But yeah. I know. I've got my air conditioner blasting in my office right now. So it's like I went from heater to air conditioner. I tell you, it's crazy. All right. Well, Mr. Millard has the afternoon off, so Aaron and I will be manning the ship for you today. Let me tell you what we have lined up for you. Our topic today is making money in real estate while others wait. You know, a lot of people are sitting on the sidelines right now. They're complaining, moaning, and groaning. Oh, I'm going to wait for interest rates to drop further. Oh, I'm going to wait for housing prices to fall further. Well, guess what? You don't want to be doing that. And I'll tell you why. We're going to show you how smart investors are actually making money in real estate right now, while all of the rest of you are sitting back going, they're going to go lower. Rates are going to go lower. Housing prices are going to go lower. And we're going to show you how to do this today without taking on a crazy amount of leverage, without taking unnecessary risk, none of that. This is going to be sound, fundamental ways that you have not heard in a long time that you can get in there and make some money in real estate again while so many people are sitting on the sidelines. Aaron, over the course of a week, and I have no idea, I may sound like an idiot asking you this question, but I want to do it anyways. Over the course of a week, how many people come to you and say, hey, I want you to just kind of start shopping around. This is what I'm looking for, but I'm not quite ready yet. I want to wait for rates to drop. I think housing prices are going to drop. How common is this?
Well, John, in the good old-fashioned world of sayings, if I had a nickel of every time I heard that, I'd be a rich
so I'm
man.
on path then.
Yeah. Honestly, I hear it a lot, and I mean, it sounds horrible, but unless people are actually ready, there'd just be so much work. I'd never leave my office. I'd never breathe, So
absolutely.
I always tell them, I'm like, if I get something that just falls in my lap and I need to fish it out with a bunch of people. Hopefully at that point in time, I'll remember you and I'll throw it out to you. But really, if you're not ready to fully engage,
don't waste my time.
Yeah.
There's not enough hours in the day to do that. Yeah. I'm with you. Yeah. You have to do that. But it is a common theme though.
Absolutely. Especially with, you got to think when rates were super low, you could go out and buy pretty much any investment property. And if you had enough cash to put down, you can get it to positive cash flow, right?
Sure.
Nowadays, no way, Jose. So now you have to get to a place where you're being more creative on finding the leverage to buy those things, or you need to find something that's in rough shape, something that you can get into at a good buy and immediately have some equity to flip or leverage or whatever you want to do.
How tough, just off the subject a little bit, how tough are finding the cash flowing investment real estate deals right now?
So traditionally, when we would find them sort of being marketed, that doesn't really exist anymore. And if you see them at that point, it's too late. If you see them being on MLS or you see them on Zillow or something like that, so does everybody else. Good luck, right? And then it takes all the meat off the bone.
Yes.
So the pocket side, they're quite often happening because, in the last environment that we've had that we're still kind of in the tail end of, I believe, is we talked about this. A lot of the sellers are the must sells. They're not the
and that's what we're going to be getting into.
I want to buy up or any of that. It's like divorce, death, things like that. So relocation, job. So because of that, there's potential there for good investment opportunity.
Right, exactly. And I hope in our discussion today you can bring up something you just mentioned a second ago, the pocket. You said the pocket, and what you're referring to, of course, is the pocket listing. And I hope you explain to people, because a lot of people are not familiar with what that is. And some may actually deem it as it's not fair, it's illegal, but it is the way it is fair and it is legal. That's why you need a professional like yourself, because you're going to find out when Aaron describes what pocket listings are. It's the old saying, it's not what you know, it's who you know. And and Aaron, from what I've seen, is the larger the deals, the more the pocket listings come into play, right? Rarely do you find a mansion that's, and I'm just gonna go extreme, definitely probably out of our area, but you get into, Beverly Hills, those type of things. Those people don't list their houses. Lord knows they don't list them on MLS. Rarely do they even list them on the real estate brokerage company that's representing them on their side. They don't want people to know that they're moving. So what do? They talk to their agent and they say, okay. Well, matter of fact, I just let the cat out of the bag real quickly. Explain what pocket listing is, then we'll move on.
Yeah, I mean, you kind of touched on a little bit. A pocket listing is, I have one right now, for example, where I have a person who has a commercial and residential, could be either or property that's located in an area where there's some future development that just got approved. And they're not really wanting to put it on the market because there's a lot of work that would have to be involved to do it, but they also want to sell it. So they're like, hey, fish it out to some people that you know that like this sort of thing. And if you find somebody that sees the potential in it and brings me a good deal, then I'll take it because I'm done. I want out.
Yep.
So
Yep.
that's a pocket listing. It's not actually on the mainstream marketing
Right.
platforms.
Right. And a lot of times it's done for like the reasons like you just said. Many of the times it's done for privacy reasons, again, especially when you get into the larger properties.
Especially with tenants.
Yeah,
they don't want to feel like they're
especially with
getting
tenants
sold out from underneath.
and commercial property. To your point, a lot of times businesses do not, because the first time that you see that a business that, and it's not common that businesses own their own real estate, but when you do see that, and then you see a for sale sign, people think, oh, they're going out of business. Well, they may not be. They may want to downscale. They might want to go rent, free up some capital, but it's perceived as, oh, this business is in trouble. And then you start having that negative impact on the business side. So very common area for the pocket listings there also. All right. So we got a lot to talk about. This is going to be a great topic. I can't wait to get to it with you, Aaron. In the meantime, I want to share with you, everybody, we've got some breaking news in regards to Netflix. The stock is popping big right now in the after hours session. Regular session was up $1.89 to $84.59. Right now I'm watching it up $7.55, 8.93% at 92.14. It looks like they're going to ditch their Warner Brothers Discovery offer, and they're saying that I mean, this whole saga it is one absolute convoluted mess trying to figure out what's going on. But you've got Warner Brothers Discovery. They've made offers. Paramount offer is now deemed as superior to Warner Brothers Discovery. So who knows what's going to happen? I mean, Netflix is doing the right thing, saying, all right, we're going to shop this thing and so on and so forth. So we'll see what happens. Again, we've been down this path before, but for those of you that are Netflix shareholders, making hopefully a little bit of money in the after hours session on that news. So it's like I said, that news is just breaking as we speak at this point. All right, speaking of the news, let's get down to what happened in the markets today so we can get this moving. Wild ride once again on the Dow side of things, up a couple hundred, down well over 200 at our worst level. When it was all said and done, looked like we didn't even open the market today. Finished up 17 on the Dow, 49,499. NASDAQ, not quite so fortunate. It had its problems, down 273, 1.18% loss to 22,878. The S&P gave up 37 points, about 0.54%, closing at 6,508. Now, for those of you that listened to the show yesterday, and if you didn't, please check us out on YouTube or your favorite podcasting distributor. Because I told you yesterday we had two major earnings numbers that came out after the close. We had NVIDIA and we had CRM or Salesforce. What was absolutely bizarre was in the after-hours session yesterday, NVIDIA, which had incredible numbers, incredible growth, incredible profit, it could not have been any better. Stock was only up, when I started the show, it was up just a little under $2. By the time the show ended, it was actually down a few cents. And I kind of traded that way overnight. I was watching it very close in the after-hours session, obviously in the pre-market session. But I told you on the show yesterday, it's like something is strange that this stock is not moving higher. It should be because, again, the numbers were great, the guidance was great, so on and so forth. Well, lo and behold, we get into the pre-market today, and it's down just a few cents. And then the market opens up, and it kind of goes up just slightly. And then, bam, here come the sellers. And they pounded the heck out of NVIDIA today. Ended up losing $10.74, 5.49% loss to 184.89. Again, no news behind it. You can say, well, is profit taken? It's like the news by the rumor, meaning, all right, they reported earnings. Now what's going to happen? Who knows what the reason is, what these institutions and these algorithms are looking at. But boy, that was a big surprise. CRM was down in the after hours. They had a good earnings report, but not great guidance in a couple different areas of their business. So it traded down after hours, traded down pre-market. It finishes actually positive today. It shot up 4.03%, $7.72 gain to 199.47. So, those two stocks, again, big participants in the Dow Jones Industrial Average. Advanced Micro Devices was down about $7.18. That was one of the pressure points on the NASDAQ. Broadcom, another big one, down $10.61 to 321.70. Got some big news in the after hours also. Let me see what the stock is doing before I open my mouth here. I didn't get a chance to check, but I want to see how it is performing. Yeah, it's shooting up. Okay, here's another big news story that came out about 20 minutes after the stock market closed, and that is Block, formerly Square. It trades under the symbol XYZ. Now, remember, this is Jack Dorsey's company. It's been hugely successful. Again, a few minutes after the market closed, he came out, said, guess what? Ready for this one, Aaron? Talk about AI. We're getting rid of 50% of our workforce at Block. That equates to over 4,000 jobs. Gone, just like that. They're not saying that's because AI, but come on. When you're a credit card processing company and all that, doggone well it's going to be AI. I'm sure it'll come out in the woodwork later. Stock is rocking in the after hours, up 22.5%, $12.25 gain to $66.78. So there's another example. Love AI, hate AI. Let's see. Only other one I want to mention, Norwegian Cruise Line, big mover today, up 5%. Hoped we got good strength in the travel area. Expedia was another one in that sector I was watching closely today, up nearly 7%, $14.19 rise to $217.93. We'll hit the commodity side when we come back with Aaron Clark, and then we're going to get into our topic, making money in real estate while everybody else is sitting on the sidelines. Let's turn it over to the wonderful Kristen Snow, Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with our dear friend Aaron Clark of Edge Realty filling in. Dwight has the afternoon off. Once again, we're going to get into our topic, making money in real estate while others wait, right? Snoozers versus the losers, I guess we could say, Aaron. Man, oh man, don't want any of those people. You got to get with it here.
That's right.
We're going to get you fired up and show you, again, what everyone else out there is doing. Once again, we finished up 17 on the Dow, lost 274 on the NASDAQ, and a 37-point give up on the S&P 500. Commodity-wise, 26-cent loss on oil, 65.21 a barrel. No excitement there. $32.36 decline in gold, 5,194.10. 10-year Treasury down 3 basis points, yield 402. Ooh, getting back down to that 4% mark. And we finished with a big goose egg on the 30-year mortgage, according to Mortgage News Daily, right at the 6% mark. I'm sure you don't have much comment on that side, Aaron. That's pretty much where it was the other day. We hit 599. Yeah, it hasn't moved much. All right, perfect. All right. Well, with that said, I want to get into today's topic. Why waiting usually costs you more than acting? Start with that one.
Yeah, I mean, we get it a lot in our industry, and I know you hear it a lot, right? I'm waiting for the market to bottom out, or for the market to crash, or for the housing market to crash. And I can't tell you how many stories I have of different people that have said that to me who still haven't bought anything.
Right.
And it's like, okay, well, the stock market is breaking records every month. And the housing market, even in the climate where we were seeing 8.5% interest rates, almost 9,
right,
it was still moving. I mean, we weren't seeing prices come off like we should have. We should have seen a 10, 15, 20% decline across the board instantaneous. But we just didn't see it because our supply was really low and the demand was enough.
I was going to say, it really comes
there.
down to the supply side
Yeah,
of things.
always. It's always going to be that. And we see it again, in the market side, we're seeing record numbers of different things in the stock market. It's like, listen, people, you can sit there on the sidelines and do nothing and wait for the things to crash, or you get in while you can. And as long as it's affordable, Corey and I talk about this all the time. If you can afford it and the numbers work now, do it. Because you heard the whole adage, date the rate, marry the property, right? You marry the property. If rates change in your favor, great. Then you can refi and make adjustments along the process.
And this is a good time, Aaron, to remind everybody. That's an excellent point. Great time to remind everybody. Well, again, there's two very distinct ways of buying real estate. One on the the primary residence side of things. One, of course, on the investment side. And you just brought up an excellent point. I don't think you even brought it up, or you realize what you said, but it's a brilliant point. The rate side of things. A lot of people don't understand how rental properties are valued and appreciate or depreciate differently based upon cap rates, cash flows, et cetera, versus your primary home. So explain that a little bit further, because for those that want to wait and say, oh yeah, I need to get, this house needs to come down 20% before I can get it to cash flow. Not really the case, because you come in with a lower or more down payment. And again, assuming you're comfortable with the rate, you can get it to cash flow. But more importantly, the point I'm getting to, Aaron, is at some point when you want to sell, if you ever do, Right. That rental income and the cash flow that property is producing, that is factored in huge in the appraised value of that property versus, again, your primary home, which is just based upon similar homes that the real estate professionals decide what the value is. It's a little bit more of a science when you're talking investment properties based upon interest rates, cash flows, et cetera. So go down that path for a moment.
Yeah, absolutely. I mean, when you're looking at something that's a multifamily unit of any type, you're not going to have another one across the street that's exactly the same to compare it to. So how we generate a value is we look at the rents. In our language, we call it the cost of the door, right? So each door has a cost. And so in purchasing something like that, let's say you're buying I don't know, a 10-plex, for example, and it's dilapidated, rents are low, there's a lot of long-term tenants in there, so nothing's been moving or done or upgraded or upkept or maintenanced or anything for a long period of time. So the value is going to be significantly lower because based on those current rents that are under market value, you're going to get a great deal on something like that. Then you come in, you dump some capital into it, you start cycling out tenants that are on month to month, upgrading those properties for minimal expenses, paint, carpet, countertops, new appliances, things like that. Now you can charge, let's say, 25% more on the rent for each one of those doors. Now the property's worth 25%
There
more
you go.
than when
That's
you
the
bought
point
it.
I've been waiting for you to
So
say.
that's how it works.
And remember, folks, when you get into that side of things, now you're hearing institutional strategies from Aaron Clark. And when he's talking about the cost of capital, so let's say you budget, and this is where, again, things are so different when you're buying investment property. You come in, you find that undervalued property, or you and your broker do, you find that undervalued property, the cost per door is way below market value. It's happening for a reason. Like I said, short-term tenants and under market value rents. I mean, that is the number one way to make money in investment real estate. Find properties where the rents are 3 or 4 years old. And I
Yeah.
run across that all the time with my clients. I'm like, what do you mean you're only charging 1,500? I know rents in that neighborhood are 2,500. Yeah, but they've been long-term tenants. Like, no, 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 no. You can't look at it that way. But then when you get into the next step to get the value of that per door up, like Aaron said, paint, carpet, countertops, etc., that costs money. What are you going to do? You have to factor in the cost of that capital. Are you going to take money out of the stock market to do that? Are you sitting on cash where you're not making anything? Okay. Do you need to go get a loan? You have to factor all that in. And then, like Aaron just said, what is the return on that investment? So it's going to cost you to put those upgrades in. So what's going to be your ROI or your return on investment on that? You have to factor that in. Way too often, Aaron, you and I see people, they'll maybe find a great undervalued property, but they fail to account for their cost of capital. They go, oh,
Yeah.
I'll go put it on a credit card, or I'll go take out a high interest loan, and they're paying 10, 12% interest, if not more. If it's credit card, it's definitely more than that. They'll never recover, right? It's going to take, even if they could
Yeah.
bump up those rents a couple $100 a month because they put in $10,000 worth of improvements, what's your payback time period? It doesn't make a lot of sense. So you really have to factor that cost of capital in when you're doing those improvements.
Yeah, absolutely. And I mean, you can kind of offset some of that by if you're in a negative cash situation, you have write-offs and you can
I was just
offset
going to
other
bring that up. Yep.
incomes and things like
Yep.
that. So, and your strategy might have to change more from a short term to a long term.
Mm-hmm. Mm-hmm.
But I mean, and it's important in the beginning too to also be very prepared because I've seen a lot of people get into that situation. They're like, oh, we're just going to do some moderate upgrades, kick out all these tenants, and then re-rent
Yeah.
them out
Yeah.
for market value. And there's mold, or there's a
That's right.
major leak, or there's major damage, and now you're talking, $400,000 of repairs. So you got to be prepared well going in too, and making sure that you're getting those things inspected.
Or don't have my personality. I've done one house remodel in my lifetime, and I'll never do another one because I learned my lesson. Exactly to your point, started off, oh, let's just expand our walk-in closet. Well, that turned into a new bathroom downstairs, right? Really had a lot to do with it. Oh, well, we
Yeah.
might as well remodel the master bedroom because, of course, it's tied to the walk-in closet. And, $40,000 later, yeah.
40. That's not enough
This
nowadays.
was like 15 years ago. Yeah, I know. I got a really good deal with a contract, but it was a long time ago.
Yeah.
But I swore at that point, I think you've always brought this up. Whatever you think it's going to cost you, double it, if not triple it. It's
Yeah.
whatever you think your time period is, double it or triple it because it'll drag on forever. And then you're like, oh, the contractor, just for another $10,000, we can, put in a new vanity and we can do this. Well, you're already here. What the hell?
Yeah.
It's a game, well, I tell you. But that's a great point you're talking about. All right, making money in real estate while others are sleeping, basically, is what we're getting to. While others are waiting. So there's a prime example. Find something under value. Get a trained eye. If you're new to this game on the investment side, hire someone like Aaron, Corey, et cetera, that have the experience, because you can get yourself in trouble if you don't know. It may be really look great on the surface. Oh, I can really buy this for an undervalued price. But like Aaron said, there's so many gotchas sitting out there. And then we're not even factoring, Aaron, right? What happened in 08, 09, where the market changed overnight and now you're
Yeah.
stuck and you've already
Or
committed that
COVID, when you
capital.
couldn't kick
Or
out
COVID.
tenants who were not
Yep.
paying. Yeah.
That's right. Exactly. Same type of thing. All right. We'll continue our discussion. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH with Aaron Clark of Edge Realty. Once again, we finished up 17 on the Dow, lost 274 on the NASDAQ, and a decline of 37 on the S&Ps. I want to take a quick look. I'm getting some headlines here, Aaron, as you and I were chatting during the break of futures coming down a little bit here. When has this just started trading? Oh, boy, are they ever. Yeah, Dow futures down 250. NASDAQ's down 61, and looks like S&Ps are on the downside by about 21. Looks like that pressure started again on the Dow side, but we will see again. Just started trading there, so we've got a long ways to go. All right, my friend, let's get back to our topic today again, making money in real estate while others are sitting on the sidelines, why they're waiting. We covered why waiting usually costs you more than acting, right? You got to move before the rates. You got to move before you think the housing prices are going to come down. Best deals, they're not found on Zillow. We talked about the pocket listing. Let's go to our second point. Distressed opportunities without foreclosure. We've all heard Corey's stories, wonderful stories over the years, spending hours and hours on the courthouse steps when the foreclosure frenzy was going on. But Aaron, you put down there's a lot of great things you can do. Finding the homes pre-foreclosure, finding the homes in probate, divorce. Landlords, like my clients, a lot of them, I'm sick and tired of being a landlord. I don't want to do it anymore. Let's talk about that, because that's one way that, again, a lot of people don't want to take the effort to find those golden nuggets in the stack.
Yeah, those aren't going to be things that you're going to get on some website and hit show me great golden opportunity lottery tickets that I'm
Yeah.
guaranteed to get. So those are really going to require more work. It's going to be who you know, your sphere of people. So for example, Corey and I, we have a lot of different vendors that we use, from house cleaners, window cleaners, landscapers, etc. Usually they're the first ones to know. They're like, hey, I might have an
Interesting.
opportunity for you. I do this guy's lawn,
Really?
and the wife just threw his crap out on the lawn. And
Oh my
I
gosh,
mean,
no
like,
kidding.
she caught him
How
cheating and they're
funny.
going to have to
Yeah,
sell that
yeah.
house. So
Wow.
you get some of those, or house cleaner gets a phone call. Hey, we really need to do a full deep cleaning because we're going to meet with a couple of realtors and get our house listed because, I just caught so and so doing some things he wasn't supposed
Yep,
to be doing,
yep,
type thing.
yep.
So you have that kind of a situation. We get a lot of leads from that. So those are
That's
also kind
fascinating.
of pocket listings, if you will. But then also something that anyone can get and anyone has access to is every title company in town has a free list of notice of defaults. So it's just a
Hmm.
list of properties, or pre-foreclosures as we call them, that are distressed or they're heading in the distressed arena. That's a good list to get. It's free. They all provide it to us realtors.
I
If
didn't know
anybody
that.
tries to tell you you need to pay money for this, that, or
Yeah.
the other on a website, all the title companies have it. It's free. So you can get lists of those from them. And then a lot of it is, I find people all the time. I'll have clients, they call me and they say, hey, I noticed the house on the corner. Used to be, John and Sandy living there, and I haven't seen him in months, and the house seems to be abandoned. What's
Yep.
the scoop?
Grass is 2 feet tall.
Yeah. So then we do a little research and find out that, they passed away. It's a probate. We can get an opportunity on a situation like that. So there's a lot of different ways, but again, not a
What?
website to search.
Yeah, exactly. What percent of realtors do you think go through that detective work to find these diamonds in the rough? I know you and Corey do it, but is it common or is it too much work?
I think the interesting thing is it's a little bit old school, if you will, in the
Yeah, it
sense
really
of
is.
people that have been around for a while. That used to be how you would generate a lot of things. And so the art of doing that, I think, is a little bit lost on the newer generation that's coming in, where it's more about,
Interesting.
I've got to put together social media grabbing
Yes.
campaigns, and that's where I'm going to get all my
Not going to find
business,
those
and it's
type of
all
properties
mainstream.
that way.
Yeah, but everybody can find those. So I think that that's more the situation where, again, it's kind of dying out. So
Yeah. Yeah.
a lot of people
Okay.
don't know how to do it.
Right. Yep,
Yeah.
you got it. All right, let's get into the financing side because this is another way that you can take advantage of sleepy investors out there. Let's talk about seller carrybacks, subject to deals, and lease options and tight credit markets.
Yeah, so we do have some seller carrybacks which are happening, which is where, like, let's say a person is selling a property, could be an investment property, could be a primary residence, whatever, but it's paid off. And they know that financing right now is tough. So they're offering to carry the note. So in essence, they become the bank. So those terms are usually very well negotiated. People want really strong financing. They want you to put 50% down and and then they'll carry you for 5 years. And then after that, they want to pay off or a balloon of some type. But there's also quite a few out there. I have some clients right now that they're like, hey, I mean, I just need to unload this condo and I would do 10% down at 4% for 30-year amortized, but a full payoff
Sign me up
balloon
all
in,
day. Yeah.
in 10 years because I
Yep.
want my money by 10 years. So now you have the 10-year flexibility to refinance that at any time in 10 years and pay them
Absolutely.
off and get into a great deal. So, and the cool thing is they're not doing underwriting and background checks and
No,
credit
no,
checks and
no,
proof of
no.
income and proof of employment.
Because they're still on the title. They still have their
Yeah.
collateralized
Yeah.
security.
If you don't
I
pay,
want to,
they
I want
just
to,
take it back.
yeah, exactly. And sometimes they don't want you to pay. They want to take it back.
They
I've
don't
seen
want
that
you to
happen
pay,
before.
trust me.
Right. Now, I want to just before we move on to the next point, I want to kind of go a little bit deeper and remind everybody, folks, if you have an investment property, right? Taxes, capital gains taxes are always a major issue, right? The first thing you do if you're deciding to sell, it's like, what's going to be my capital gains exposure? Also, we always like to remind everybody, remember the gotcha tax, the depreciation recapture. You saw that investment property, the accountant's going to tally up all of the depreciation you've taken over the years, which again, if you've owned properties, I did one for a client, I don't know, 4 months ago. He'd owned it for like the early 80s, right? Depreciation was all gone, but it was hundreds of thousands of dollars. And this wasn't an expensive property, but that's a 25% tax that a lot of times accountants fail to tell and people just don't know. So very, very, if you're talking California, whole nother set of taxes, et cetera. So it
Yeah.
can be very expensive. The owner carryback is a wonderful strategy, many times more powerful than doing it on your primary home. And here's why. Let's hypothetically say you've got a capital gains tax of say $100,000. Just round up the numbers, 100,000. If you sell your property on a note, right, a seller carryback, and let's say you do it for 10 years, let me ask you a question. Do you want to pay a tax on $100,000 worth of capital gains all up front, as if you sold the property, cashed out, or would you rather pay it over 10 years? I think most logical people would say, yeah, I'll take $10,000 capital gains, this year for the next 10 years. That's what you get to do on an installment sale. You do not have to recognize the full sale of that investment property in the year you sold it if it is on an installment sale. If you sell it over 5 years, you take 1/5 of the capital gains, 10 years, 1/10, so on and so forth. So again, you got to run the numbers, see where you are. But many times, Aaron, that can be very, very incredible source of additional retirement income. Again, you're very secured on it, like you said. Sometimes they want big down payments and so on and so forth, but you're on the title. And if you can get, 6% in today's market, 7 somewhere around there, man, you're home scot free in many cases. So always an idea to talk to your real estate professional, your accountant, et cetera, about, because a lot of people forget about that.
Absolutely.
They call me and they're like, I don't want to do a 1031 exchange. And we do have some products that'll give them the tax deferred status. I'll just kind of use the term Wall Street products. And then I always bring up, are you willing to do an installment sale? Because I'm telling you, you advertise that, especially with the right professional like Aaron and Corey, you'll have people knocking down your door because there's just not a lot of people that want to do that. So it's another way, especially if you want to get out for hurry reasons, that type of thing. Think about the seller carryback. It's a wonderful way to go.
Yeah, and the other good part about that situation is it's kind of like the lottery, right? You win the lottery. Do you want to take the chunk sum or do you want that
Or
payout?
take the annuity payment.
It's kind of the
Absolutely.
annuity payment strategy,
Yep. That's right. That's right. And, I don't think you and I have ever gone into great discussion. I know I have with Corey. I love the lease option, right? Somewhat similar to that.
Yes.
Where you're collecting money
Very
up front
similar.
and then you're going to sell it at a predetermined price, say in 5 years. In the meantime, as that rent payment's coming in, you're setting a little bit aside for the down payment for the buyer. And then, 5 years, and you and I have seen this, Aaron, many times in our career, They don't want that property in 5 years. So you've collected a lot of money, and it's usually, if the contract's written, that money, it's gone. It's yours as the owner of that property. And you go on and you do it again and again and again. Always wonderful ways to get creative. There's so many
Yeah.
ways. That's what's so
Lease
wonderful
options
about
are
real
definitely
estate.
coming back stronger than they have
Yeah, that's
in a
what Corey
long
said a
time.
couple months ago. Yep, he said that.
And assumptions
All
are
right. Well,
becoming important. Yeah. We'll talk about that
yes.
later.
Yep, absolutely. All right, let's wrap it up with Kristen Snell, the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk KOH. We've been joined by Aaron Clarkovich. Really enjoyed today's interview, Aaron. As I was telling you during the break, I love interviewing you. You're just a great co-host. Let me bring everybody up to date. We're down now 278 on the Dow futures, down 85 on the NASDAQ. So got some weakness going on. We'll see if things stabilize. And again, these futures have been really inaccurate. We've been seeing days where they'll be really strong in the pre-market, and then we sell off at the open, and vice versa. So take it with a grain of salt. But there's something going on. We do have a PPI tomorrow. I wanted to mention there's some concerns that number may come in a little bit hotter than expected. So we'll see. And that's going to be 5:30 tomorrow morning. All right. We've been talking with Aaron about making money in real estate while others wait. Aaron, in last segment here, I want to get down to, let's go to, man, which one do I want to choose with you? There's so many. Let's talk about partnerships over pressure, right?
Yeah,
I know Corey's always used the story. That's how he got started. He found the deals, found investors that believed in him, and he'd kind of partner in the deal and stuff like that. So the partnerships, you bring the capital, others bring the deal, or vice versa. And then it's a great way for passive investment opportunity, especially like for retirees that don't want that phone call in the middle of the night. They don't want to go find the diamond in the rough, as we've been talking about, but they obviously want the cash flow and the upside potential. So let's talk about that one.
Yeah, we're seeing a lot of it with multifamily generations, which is great.
Interesting.
So I'm seeing a lot more, mom and dad, they're retiring. Maybe they didn't do such a great job of preparing for that financially. They've got some cash, and kids are starting to step in, and they're looking for opportunities for that cash to have some good growth. So mom and dad got the capital, kids got the time, ability, resources, as far as, maybe they're in some line of work that helps out, construction, property management, whatever. And they kind of partner in that situation, and then it's helping provide some additional income to mom and dad or grandparents or whatever. So we're seeing a lot of it in that arena. I have a few clients where one person's more the capital, the other one is a contractor. So the contractor does all the work at their cost, and the other guy provides the funds. And so you see a lot of that opportunity. I mean, there's just a lot of
get creative is the bottom line. Yeah, get creative. I mean, that's the way to do it. And don't shut out any opportunity. Let it be known that you're seeking opportunities. I think that's the other challenge. Like the contractors, I've had a lot of contractors as clients over the years, and they're like, man, I could go in. I had one situation where the client was going to buy, this is when flipping was real popular. A client was going to buy a house, flip it. They got bids from various contractors. And, it's like, oh man, that just blew that budget. If I went that way, there's no way I'm going to make money on this. And I'm thinking to myself, I know so many contractors, like you said, especially the young, hungry guys. They'll come in and go, listen, I'll give you 20% of this project. I'll pay for the materials. You provide all the labor, right? Just as an example. There's guys all day long that would do that. Not so much anymore.
Do it in their off time. So
do it in the weekends, their off times. Exactly. It's because it's a great retirement savings for them. So bottom line, don't shut your eyes or your ears to any opportunity that's out there, because it is. Spread the word. Like you said, networking is the real key there. Aaron, I think we have time to squeeze in one more, and I want to get an update from you on the equity and hidden properties, the ADUs, the garage conversions, that type of thing. I know in Washoe County, I'm still a little fuzzy if it's all gone through as far as the ADUs being passed by city council, et cetera. Real quickly, what's going on there to your knowledge?
All that stuff is kind of still trying to be ironed out, but
is it okay?
I mean, we're going to see some changes. I mean, we've seen it in California right now. We're going to see it here. It's growing. It's happening. We're starting to see a lot of people that are buying properties and converting garages into studios, and now they have a 2-unit place or an in-law quarters. Or you're seeing more of the in-law homes where you can rent out, you could get something like that and rent it out. Again, you have to be careful of like what the restrictions are with HOAs and things like that. That's what I mean.
Yeah.
Yep.
But it could be a really feasible way. If you find a property and you're like, okay, yeah, I can get whatever, $2,000 a month rent, but I figured it out zone wise. I could put an ADU in there and bring in another $1,000 or $1,200 a month. Just be imaginative. Just think, have a great team, and don't have your eyes or ears closed to anything. I think that's my best piece of advice. Great job, my friend. Phone number real quick.
673-6700.
Perfect. Aaron Clarkovich, really our special guest. All right, buddy. We'll see you on Tuesday. God bless everybody. I'll be back with you tomorrow on the Jon Sanchez Show. Have a great afternoon.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.